If you look back in the 1980s, what happened there is Paul Volcker increased the Fed funds rate over the interest rate, and that's what caused gold to crash. So it's like if you look at it, inflation, let's say 7%. The Fed funds rate is 4 and change right now. You're still a couple hundred basis points away from that. So I think as long as the Fed funds rate is below the inflation rate, I think you're going to see gold rally.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Patrick Yip, the Director of Business Development at APMEX and OneGold, joins us today. It's the first time to have Patrick here, so we'd like to welcome him on board. It's time to saddle up and silver up for Patrick Yip. Patrick, welcome to SBTV. How are you doing?
Good. Thanks for having me on, Patrick.
Glad to have you on. Patrick, since it's our first time to have you on board, of course, welcome. And can we start by letting the viewers know a little bit about yourself?
Yeah, sure. So I am the Director of Business Development here at APMEX and OneGold. For those of you who don't know, APMEX is one of the largest online precious metals retailers in the U.S. We've been in business for north of 20 years, and we have sold about $15 billion in retail products to retail customers. I personally have been with the company for about 12 years now. I've had various roles in merchandising, sales, project management, marketplaces, and now business development. Most recently, I began running the company's online investment platform called OneGold, which is a platform that allows customers to buy vaulted positions of gold, silver, and platinum. And as a data point, OneGold has done about 900 million in transactions in its first 4 years of business. I was also involved in launching the first ever precious metals rewards credit card, and it's called the Bullion card. I actually have one over here, and I have not applied for a credit card in about 15 years, but I thought it was so cool that I did apply for it.
How is that OneGold doing? I mean, obviously, it's been growing. Do you see more people looking for that need to go into OneGold?
Yeah, so let me first start about telling you, first of all, what OneGold is. So back in 2018, APMEX partnered with Sprott Asset Management, which is a large alternative asset manager out of Canada with about 22 billion under management, to create a modern and intuitive way to buy precious metals. So many people call it like the Robinhood or Coinbase of precious metals because it is so intuitive to use. OneGold is a platform that allows customers to buy, sell, and trade vaulted positions of metal stored in the U.S., Canada, Switzerland, and the U.K. How we do this is first, OneGold has agreements with various vaulting companies around the world, so such as like a Brinks and Loomis. We then source wholesale bars, so 400-ounce gold bars, 1,000-ounce silver bars, and then we list this metal on OneGold for sale. When it's purchased, it's 100% owned by customers. Customer metal does not appear up on OneGold's balance sheet, and prices are attractive since you are taking like a fractional ownership in a larger bar, or in some cases, if you have more than the bars, then you essentially own the bar. Metal is sold at 80 basis points, so 0.8% over for gold, 2% for silver. All the metals regularly insured and audited. And one of the nice things about it is if you ever want to take a possession of your physical metal, we offer a redemption option where your metal could be swapped into any of the 25,000 plus products available at APMEX. And in fact, a lot of customers we're seeing at our end, they're seeing crazy high retail premiums, and we could get into this in a bit, and they don't want to pay the $13 over spot for a silver eagle, so they're getting into OneGold at 2% over, which is roughly 48 cents today. They're holding OneGold, and when premiums come down, which we do expect them to come down on the APMEX and physical side, they're redeeming this metal for physical metal. So we are seeing a lot of demand. Getting back to your original question, we are seeing a lot of demand, a lot of new customers getting onto this platform. I think out of a lot of these modern vaulted platforms out there and created in the last couple of years, I think we are one of the larger ones.
Okay, so if they can, let's say, redeem for gold, and they can redeem it for basically one of your products. So that means they could redeem it for an ounce or maybe even less.
Yeah, so since you are redeeming, so like I mentioned, on OneGold, let's say you had silver, you are having fractional ownership in a 1,000-ounce silver bar. So when you redeem it, depending on the product you're redeeming for, there is a small retail premium to pay. So if you wanted to redeem it for a 100-ounce silver bar, obviously it's a couple dollars over. If you wanted to redeem it for a silver eagle, which I personally wouldn't do right now, I think premiums of silver eagles are way too high. You could do that as well, but you have to pay the retail premium of that silver eagle.
All right, Patrick, can you let us into the offices of APMEX and let us know how your average day goes as Business Development Director?
Yeah, so right now I'm primarily focused on two things. One is marketing OneGold, so bringing the visibility to OneGold. As I mentioned, it's a 4-year-old platform. We recently launched foreign currencies, so We have the ability to have an account in British pounds, euros, and Canadian dollars. You could fund in those currencies too as well. We're working to grow that too. We're speaking with a bank direct debit processor over there in Europe, and we're about to onboard them. So a lot of it is growing OneGold, making it more like a global platform, making it more user friendly. And in addition to, like I mentioned, the Bullion card. This is something that we just launched a couple months ago, back in August. So we're actively trying to promote this thing. In fact, later this month, we do have a 10% back on certain items on APMEX.com if you use the Bullion card. So we're just trying to bring the visibility out there, bringing precious metals to the everyday consumer life.
Yeah, Patrick, it seems almost every year the U.S. Mint has to allocate their products. Specifically, it seems like Silver Eagles. Uh, from where you sit, is there a shortage in silver either on the retail or wholesale level?
Yeah, so I think there's two different things going on. I mean, let's talk about retail, then let's talk about wholesale. So on the retail, I'm talking about like Silver Eagle, Silver Maples, and so on like that. So there are high premiums right now. I think anyone who's bought silver recently has seen the premiums have skyrocketed. They're almost at crazy levels. It's basically a function of supply demand. On the supply side, first you have the U.S. Mint winding down the productions of the 2022 dated coins. Obviously, it's December 2022. You have some mints that are done with the 23, some are still in the process. That's the first thing. The second thing is we are seeing a trend change on the APMEX side where less customers are selling metal. So typically we would get an inflow of metal from retail customers. And then that is now declining too. So a lot more people are holding on to metal in the past couple of years than let's say 10 years ago. And then third, there's a shortage of blanks. So it's important to note that a lot of these mints, especially the U.S. Mint, they don't make their own blanks. So these are the round discs before a coin is stamped. They actually have to source it from a third-party production company. And what's happened in the past couple of years is you've had the crazy demand in 2011, 2012, and then you had a whole bunch of flat years where the metals did not do any much. So you had 2013 up till 2019. I mean, anyone who's looked at the metals chart see that the metals really didn't do anything. So these third-party companies have almost right-sized their production for lower volumes. And then obviously 2020 comes, you have a spike up in demand, and now these companies cannot keep up. So that's what's kind of going on, on the supply and demand side. I mean, we've been seeing crazy demand. I mean, APMEX has been in business for over 20 plus years. We've seen some of our busiest days this year. So basically, it's like tightness in supply, high demand. That's creating unusually high premiums on the retail precious metal side, but we could get into the wholesale side too. It's a little bit different over there.
With this, a lot of people tend to think, when there's a shortage, they equate that with the actual silver miners that are not pulling enough silver out of the ground. So it's actually really a product of supply and demand that is causing this slowdown, this bottleneck, not a shortage of actual silver.
Yeah, and I think a good analogy too is and I can't say if this happened in Singapore, but I could tell you in the U.S. when COVID first hit, people ran out and they bought all the toilet paper they could. I don't know why people did that, but that's what happened. And what happened there is, if you went to any of the stores, Target, Costco, whatever, over here in the U.S., you couldn't buy toilet paper. But sure enough, the supply chain's caught up and toilet paper is now readily available. So if you look at right now, the same thing is happening on the metal side. On the retail side, on silver, is like you have these bottlenecks. You have the blanking company. You have the mints. You have a lot of parties in the supply chain that cannot catch up right now, and demand is just crazy. So you are seeing it's basically supply and demand. I mean, obviously there's not a lot of supply, so the prices go up. But the demand is a little bit different on the wholesale side. If you want to get into like 1,000-ounce silver bars and grain, we're not seeing the crazy premiums over there on that side.
I was going to ask you about that. How is the supply with the 1,000 ounce LBMA bars? Is it getting kind of tight, or is it still pretty easy to obtain? And are you seeing more people moving into these 1,000 ounce bars?
Yeah, so let me just start by saying we need 1,000-ounce bars for OneGold. We primarily don't sell a lot of these to retail customers just because they're clunky, they're hard to authenticate, and so on like that. But we buy 1,000-ounce bars for OneGold. As a data point, we've done about 3 million ounces of silver just this year on OneGold. But the 1,000-ounce bars are still available. We're currently paying about 34 cents over spot, so much different than the Silver Eagle market where they're selling for like $13 over spot. But I can tell you that inventory is getting tighter. So before this whole pandemic mess, so let's go back to 2019 when we first started OneGold, we were paying about 3 cents per ounce over spot for 1,000-ounce silver bars. So like it is basically 10 times higher. But they still are available. And that's one thing that I like using OneGold because it gives me access to silver at the lower premiums. As I mentioned, we're selling silver for 2% over spot, 48 cents. We're making a couple cents on it. I'm getting exposure to silver right now. And then when premiums go down, and we are seeing premiums contract in the last couple of weeks on the gold and silver side, I could then redeem it out and get the silver, and I don't need to pay $13 over spot. Maybe Silver Eagle premiums drop down to $5 over spot. I could then get into there, and one of the things I always tell people too is like you don't want to pay, you want to speculate on the silver price. You don't want to speculate on premiums. So silver's $24 right now. Let's say you bought a Silver Eagle at $14 over spot. You paid $38 all in. Let's say silver went up from 24 to 30. You were right. Good call. But silver premiums went down from that $14 to $5. So you paid $38 for the Silver Eagle. Now your Silver Eagle selling for $35. You lost money despite silver going up by $6. So I said, you want to get an exposure to silver. I'm personally doing it through OneGold, but physical is also great as well too.
If you're enjoying this interview with Patrick Yip from APMEX and I, please consider subscribing to our YouTube channel and let those algos know you'd like to see more content like this. And if you'd like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. If you could you tell us a little bit about the grain? Is there actually a market for the grain?
Yeah, so we buy grain. We actually have a subsidiary mining company called Nine Fine Mint. So we actually make a lot of products, APMEX bars, Nine Fine bars. We make some rounds too as well. In the last couple of weeks, we've been doing about 200,000 ounces of silver per week. Grain still is available, but it is getting a little tighter than what we're used to. But we could basically get everything we need on the grain side.
Can we go back a little bit in time, and if you could tell us what it was like during the original silver squeeze a few years back? I mean, what were sales like, and what was it like trying to replenish stock?
Yeah, that was a very interesting time. So the silver squeeze, one thing I remember too is it happened during the weekend. And ideally we have a lot of inventory downstairs. We have almost $200 million of inventory down in the basement in our vaults over here in Oklahoma City. We would typically sell as much as we can. But what happened too on that weekend is we typically hedge our position. So we forecast what sales are going to do over the weekend because the markets are not open. So we forecasted it, and obviously the silver squeeze happened. I believe it was Friday evening or something, Friday, Saturday. It was sometime over the weekend. And then we could not adjust our positions. We could not adjust our hedge positions. So what happened is you saw APMEX, you saw OneGold, you saw a lot of these other precious metals retailers basically pause sales because we could not hedge. Fortunately, APMEX, what we did too is we started buying a lot of inventory over the weekend. We called a lot of our wholesale partners up. We were able to buy some and then sell that metal that we just bought. So obviously that metal's unhedged. We sold it and then we could sell a little bit more. But that basically caused premiums to go way up because you saw like a lot of demand. Inventory basically got depleted in so many different areas. Premiums go up. It's a function of supply and demand, but it was interesting times. But I mean, fortunately, we didn't get burned on the market movement, but it worked out well, and I think it was a good time.
So you expect, I know it was at that time where we really saw premiums move up, and they've been kind of slowly deflating and coming down. Do you think, will we ever get back to that normal type of a premium, or is it going to be a newer, little bit higher premium that's going to be the new normal?
So I think premiums will decline. Starting with the gold side, we are hearing news from some of the mints that they are going to ramp up production. So we expect sometime in 2023 that premiums for gold will normalize. And normalize, we'll see what that exactly means. I don't think they'll be as high as these levels. Silver's a little different. I still think silver has a lot of issues with the supply chain. And then, as I mentioned too, you had a lot of these third-party blanking and production companies almost like decrease their capacity as a result of seeing metals not do much from 2013 all the way to 2019 too. So there is not as much capacity in the system right now. So I think premiums will go down, but whether they go down to levels we've seen in 2018, 2019 on the silver side, probably not, but probably somewhere between that level and where we currently are.
Patrick, speaking of Silver Eagles, I believe you guys had a buyback going on. I think you folks were offering about $10 over spot or so. Why the decision to increase the buyback price?
So a lot of this, what happens on the U.S. Mint side, in an ideal world, what happens is the U.S. Mint gives APMEX, which is one of the few authorized purchasers in the world, they give APMEX an allocation of silver, and then we source everything we need from the U.S. Mint. That's in an ideal world. But the problem, as I mentioned, is the supply chains are messed up right now. So the U.S. Mint gives us an allocation, and we said, okay, we'll take it all. And then we said, well, we need more silver eagles because our customers are buying a lot. We then call other authorized purchasers and said, hey, you got an allocation from the U.S. Mint. Do you want to sell those to us? They'll like say, sure, I'll sell them to you. And obviously, they're in the business to make money, so they mark them up. And then we reach out to other wholesalers and we try to get more coins, that as many coins as we need to meet demand. And then it comes to the point when we said, we reached out to, got our allocation from the U.S. Mint, got our allocation from the other APs, got our basically bought from the wholesalers. We still need more coins. So we then reach out to the retail public and we said, hey, do you want to sell them for $10 over spot? And, so people are selling them. We're getting more coins in there. And then what we could do is we could meet our demand. So a lot of times it's interesting because people almost assume that the retailers like APMEX are price gouging. They're seeing Silver Eagles at $14 and they're like, well, you're an authorized purchaser. You're buying at 2 and change. You're selling at 14. You're making a killing. Go, no, a lot of it looks at our replacement costs. It's what could we buy that next ounce for? And if we're buying it at $10+, we actually paid north of $15 one time too, when inventory was that tight. But we're just making a small spread like many other bullion dealers are out there.
And how did that go? Were people able to, or were they willing to let go of the silver they had at that $10 over spot?
I think some people were, and we actually had a couple customers reach out to us, and it's just taking almost doing a premium arbitrage. Is they're taking advantage of the high retail premiums, getting into OneGold, or maybe they're selling their Silver Eagles and they're saying, hey, okay, I get $10 over spot for a Silver Eagle. Maybe they like the physical and they want 100-ounce silver bars. And these are selling for, let's say, $4 over spot. So you take the difference. You could say, well, 100-ounce silver bar, still a retail product. I'm still having it in my hand, but I'm getting more silver without spending additional money, which is what I recommend too. I mean, I don't like high premiums. I don't want to speculate on premiums. I want the silver price to go up.
All right, a lot of smart people out there. APMEX, they do carry, or you do carry a very wide variety of products. Now, do you find that although we often hear people say silver is silver, do you find that people really actually want that variety?
Yeah, so at APMEX, we like to have solutions for all types of investors. So we have 25,000 products on our site. I would say the majority of our customers, probably about 2/3 of our customers, are what we call investors. So these are the customers that are looking to hedge against inflation. They're looking for portfolio protection. Obviously, those are like your 100-ounce silver bars, your gold eagles, your gold maples, and so on like that. We also have silver stackers too. So they make up about 10% of our customers. These are the guys who want as much silver as possible. So like we also like to cater to them too. We have rounds, we have low premium products, and then you have a small percentage of customers. I would say about 4% are what we call modern collectors. So these are the collectors that like to collect a lot of the new stuff. For example, let's say Perth Lunar Series, I think is a great investment too, because what happens over there is typically the metal appreciates and the premium appreciates. And then you have vintage collectors too. So collectors of, let's say, old Morgan dollars, St. Gaudens, pre-33, $20 Liberties, and so on like that. So we like to have a solution for all types of investors. But what I would do is I would recommend that you get familiar with the different products and you decide what works best for you. I mean, there's people who make a living in numismatics and there's also people who get burned in it. So, I would just say, make sure you know what you're doing. But when you're buying silver or gold close to the metal price, you really can't go wrong because, if you lose a premium, you didn't lose much.
So for these, let's say, modern collectors, I mean, I don't know if you're carrying them, but like these some Perth Mint coins, New Zealand Mint coins, these types of Star Wars or whatever types of coins. What happens when it just doesn't sell? I mean, how do you liquidate them?
Yeah, I mean, there's a right price for everything. A lot of times it's like we don't go big into exposure and a lot of the stuff. So we do carry a lot of the Perth Mint stuff, a lot of the New Zealand Mint stuff, and so on. Certain products do better than others. Like I mentioned too, like Perth stuff tends to do well. They tend to appreciate both in spot and on the premium. I mean, one thing we just had that we released earlier this month was a Baby Yoda coin. That was something that it's just a little, you would think it's a novelty, but what happened is last year we released it for I think about $6 over spot, and now they're currently trading for about $50 a piece, so well over that. We released another one too. There's people who like a lot of this stuff too, so there's a market for it. But like I said, we tend to not go, we don't go crazy into a lot of the stuff, but we do want that product to be available for customers.
If you don't mind me asking, how much of your business percentage wise are, let's say, gold sales, silver sales, platinum, and palladium sales?
Yeah, the interesting thing about us is I would say about 70 to 75% of our dollar volume is gold, and then the remaining is about, let's say, 25% silver. It's actually different when you look at other retailers in the US where they tend to be majority silver. It's almost inverse where they're 70% silver, 30% gold. I think a lot of times too is you have a lot of the gold buyers, and the typical gold buyer is the guy who wants to diversify his portfolio, protect his against inflation, like almost the guy who's looking for that hedge, not really looking for that upside. Just like say if gold stayed flat and the world is fine, I'm fine too as well. So I think a lot of these deeper pocketed people want to buy from like the biggest. So they go to APMEX. They said, okay, APMEX is good. APMEX purchases directly from the U.S. Mint, from the Royal Canadian Mint, from the Perth Mint, from the Royal Mint, from all these other worldwide mints. We're getting them direct, and they just want to know that the product is authentic. It's coming direct from the source. It's not changing all these different hands. So we're seeing a lot more gold buyers. Than the typical retailers. But I could tell you too that our silver mix has been shifting ever since that silver squeeze. I think the silver squeeze has really brought a lot of attention to the silver market, and silver potentially being undervalued. I mean, it's been up at $50 twice, especially during 2020 when silver crashed down to $12. I thought the risk reward was just there. I mean, it was a great buy. I personally bought some at $12 too. But that's basically what we're seeing in terms of gold silver mix. Heavy gold, lighter silver, but generally trending towards silver in the last couple of years.
Okay. With that silver, again, if you don't mind, with the silver, what percentage do you see going into coins compared to bars?
So I would say the majority, probably almost half of our dollars on silver is going into low premium silver products. So these are your Buffalo rounds, your 100-ounce silver bars, your APMEX bars, basically the people who want to get as much silver as possible. So they want to speculate in the silver price. And then maybe like another 30% or so is the Silver Eagle. So by far the most popular single product is the Silver Eagle. And then from there, the rest is just broken up between the different sovereign coins, different other products, and so on. But I would say by far, the silver buyer typically buys the low premium bars and coins.
So I want to move over to the economy for just a bit, and of course our good buddy Jerome Powell. He's hinting that he may slow down the increase in rates. What do you think about this? I mean, what do you think it's going to do with the gold and silver price when he starts to reduce the amount of rate hikes?
Yeah, so I like to look at history. I mean, obviously, no one knows what the future is gonna do, but so the common news right now is that inflation is at a 40+ year high. We had inflationary cycles basically very similar to what we're seeing in the 1960s and the 1970s, where inflation was ratcheting up, the Fed was increasing rates too. A couple data points too. In the 1960s, it took the Fed 9 years to resolve inflation. And then in the 1970s, it took the Fed 5 years to resolve inflation. So where are we right now? So inflation in January of 2021 was just 1.4%. Right now, we're about 2 years in. I personally don't think the Fed has inflation under control. I mean, you have to realize, I mean, the latest CPI print is a 7.1% increase. That's still an increase. It's not decreasing. It's still going up. So let's see what happened with gold over this time too. So if you look at the 1960s, gold went up from $35 up to $200, basically a 5x move. And then fast forward to the 1970s, you had gold make an 8x move from 100 to 850. So I think inflation is likely to be here for the next couple of years. I think it's going to get sticky at some point. Right now, it's increased by like 7.1%. Maybe it doesn't go down to 2, but maybe it's 6 at 4 or 5. 4 or 5% inflation, if you looked at it a couple of years ago, would have been a very high inflation rate. But I don't think they're getting it down to 2% anytime soon.
So I guess during this time, even if Powell starts to slow down the increase of rates, you think we'll still see silver and gold steadily continue to climb?
Yeah, and if you look back in the 1980s, what happened there is Paul Volcker increased the Fed funds rate over the interest rate, and that's what caused gold to crash, or over the inflation rate. So it's like if you look at it, inflation, let's say 7%. The Fed funds rate is what, like it's at 4 and change right now. I don't know the latest. I mean, you're still a couple hundred basis points away from that. So I think as long as the Fed funds rate is below the inflation rate, I think you're going to see gold rally. In addition, I think a lot of things are cyclical too. I like to look at, what, let's fast forward a little bit to modern times too. So let's get out of the 60s and 70s. Let's look at 2000 to the present. So, you hear 2000 to 2011, you had gold make that bull run, $250 to $1,900 in 2011. Stocks, if you look at that period, people say stocks had that lost decade. So they started around 1450, ended around 12 something. In that 10-year period, basically, you've been treading water, basically not doing anything on stocks. And then you look even to today, 2011 to 2022. Stocks had an amazing run, 1250 up to 4800, basically a 4x move. And then gold kind of struggled. You had gold at 1900 in 2011. It went down as low as 1050 in 2015. Now it's at 18 and change. Basically has not done anything right now. But, I think the next couple of years is going to have a lot of headwinds for the stock market. I think gold and silver are likely to shine. And then, like I mentioned, that 1050 low in 2015, let's say gold did a move that it did in the 1960s or 1970s. If it made a 5x or an 8x move, you could potentially have 5,000 plus gold, which I think is probably a reasonable estimate, at least my guess. I'm not making any investment recommendation for anyone, but I would not be surprised to see that in the next, let's say, 5 to 10 years.
Okay, so that's the price. And outside of Powell, the economy, they're looking at the so-called electrification of everything movement, where we also have the green movement, the renewable energy movement. Would you expect an increase in the demand side now, especially for silver, since silver does play an important role with these technologies?
Yeah, silver is an interesting thing too because obviously it could go two different ways. One, it could follow gold and be that monetary asset too, and it'll be interesting to see if stocks continue to crash, which I actually think they will in the next year, whether silver goes that way or whether it goes the new, I guess, tech way, and industry way. It's done both in history too, but I think the demand for silver will go up in the next couple of years too on the industrial side. You have silver as the most conductive metal out there, and it's the most reflective metal too. So a lot of industries that like solar, for example, they need something that's highly reflective. So it makes sense to use silver. Industries that need basically efficient electrical conductors, basically the best conducting metal, they'll choose silver because it's the best metal. It's better than copper. It's better than gold in conductivity. It's the best. I mean, so I think demand will go up too as well.
I mean, it's good, but it's also a little bit worrying because if industry starts taking more of that silver, will we still be able to get silver in our hands?
Yeah, I think actually I'm looking forward to seeing industry pull some of that demand because what happens, like let's go back to that silver squeeze time. So what that did is a lot of times it depleted that retail silver inventory too. If you really want to have like a silver squeeze, I almost think that you need to deplete it on the wholesale level. So the 1,000 ounce bars, the grain and so on. And all it's going to take is some type of tech company that says, okay, silver makes up a small percentage, less than 1% of my finished good. Like, I mean, let's say Tesla, for example. Tesla probably uses a small percentage of silver for their vehicles. Their vehicles cost, let's say, north of $100,000. So they don't care if silver is $28 or $50 or $200, right? So they're going to say, well, I'm just going to buy it regardless of cost. And at that point, I think that's when you really have the silver squeeze, is when you have the industry players who need it regardless of cost, just buying it and depleting the inventory.
So we talked a bit about the economy. Patrick, what happens if fiat currency, let's say the US dollar, begins to lose its value? Will you be accepting US dollars for your silver and for your gold?
Are you talking about me personally or the company APMEX?
I know you and me won't, but the company APMEX.
Yeah, I think as long as there's a market for it, it's I think we'll accept it. I mean, we accept cryptos too as well, obviously through BitPay where we convert the cryptos directly to US dollars. As long as the dollar is still there, then we'll accept it. But one of the things I like to say, just in terms of like the dollar, I think it's inevitable that it will go away. I mean, even the US, you had the continental dollar, doesn't exist anymore, but it doesn't mean it's imminent. Maybe it happens in our lifetimes, maybe it happens in our kids' lifetimes, maybe it happens in their kids' lifetimes. I would say you need to keep it in mind that it probably will go away at some point, but don't put all your eggs in one basket assuming it's going to be tomorrow. Just, hedge your bets.
All right. So I'll just ask you last question here. What are you doing personally to address this outlook?
So I'm personally, I have three big positions right now. I mean, one is precious metals. I think they're likely to do extremely well in the next couple of years. Two, I'm heavy in resource stocks. So these are stocks making like commodities. Let's say oil stocks, mining stocks too as well. I think that those stocks would do well. And then three, I have a position of cash. And the reason for the cash, I hate cash. Especially with inflation at 7%, it's just a couple data points. I mean, 7% inflation. Let's say inflation lasts 5 years, like it did in the 1970s. That's going to erode a third of your purchasing power, and then 7% inflation at 9 years is going to erode at half your purchasing power of the dollar. But the reason I hold cash is I think that the stock markets are going to correct again in 2023. I think we're going to have a pretty massive decline. I mean, just my personal belief, and I think there's going to be a buying opportunity. And the reason I say it's going to crash is if you look at 2008, you had 2001 to 2008, 7 year period. It took a year and a half for that crash in 2008 from top to bottom. Now you have that boom from 2008 up until 2022, a 14 years, so double the period. I don't think we're over in a year yet. I think it's going to at least take a year and a half, if not longer.
All right. So even though we have the same name, we're opposite in that you hate cash and cash seems to hate me. It just never comes my way. Patrick Yip, before we wrap up, can you tell us how people can contact you or at least follow you on social media? And what are maybe some projects you're working on at APMEX?
Yeah, so I would say if you want to look at metals, I mean, I would check out APMEX. That's APMEX.com. That's if you want to get physical metals. If you want to check out OneGold too, you can check it out at OneGold.com. That's ONEGOLD.com. We have the Bullion card. They have two different versions. If you want rewards on APMEX or if you want rewards on OneGold, that's the Bullion card.apmex.com and the Bullion card.onegold.com. And if you have any questions about precious metals or the markets, feel free to just reach out to me directly. I'm at patrick.yip@apmex.com. That's patrick.yip@apmex.com.
All right. Patrick Yip, Director of Business Development at APMEX. We appreciate your time and I hope we can do this again soon.
Great. Thanks for having me on, Patrick.
That was Patrick Yip, Director of Business Development at APMEX and OneGold. To follow more of Patrick's work and to see their products, head on over to apmex.com. If you like this video, please subscribe and hit that bell and also give us a thumbs up. We really do appreciate those. Audio-only versions of this interview can be found on iTunes and Spotify.